What's going on, people? It's GBP baby. It's currently 6:52 p.m. on the 17th of May 2023, and we're looking at GBP, of course. We finally took out the sell side, which we've had our eyes on for like the entire week now, so that's nice to see. And as you can see, we instantly reacted to that and traded higher. This also means that we're now in a new trading range. So previously, our trading range, I was looking at this low to this high, but now I'm looking at this high to this low. And this is the difference between external and internal liquidity, and being able to frame what price should be looking for. For example, we've just taken out external liquidity, so we should be looking for some kind of internal liquidity to be getting taken on the buy side before us moving lower, because our higher time frame premise, when I'm talking about the weekly and the monthly, is I'm expecting lower prices across the board. So we need to keep that in mind. Yesterday I stated that I wanted to see price trade back up to the quarter level of the trading range, which at the time our trading range was this high to, was it this high to this low? At the time our trading range was this high to so this trade, yeah, right. So I wanted to see price, we were here, and then I wanted to see price come and kiss that level goodbye, and then for us to run into the sell side. Today we saw that happen, although it didn't actually trade to the level exactly. It did trade into a nice 4-hour fair value gap that was resting below it, or at it even. And you can see as price traded into that, it got rejected and continued to trade lower. There was lots of sell side here, beautiful swing low, and then we aggressively dropped into that sell side liquidity that we had been waiting for a while, and then instantly turned around and started climbing higher. So now that sell side's been purged, we need to look at our buy side targets. Of course, there's liquidity resting above here, and that liquidity is would be this swing high here, so we could put that as buy side. However, we do have to remember that overall we are bearish, and I'll explain why I have this yellow box here in a moment. So it's typical to believe, okay, we went for sell side, now we're going for buy side. Where's the nearest buy side? Here. Also there's a fair value gap, but the likelihood of us trading up there, I'd say, is pretty low, because one, we've already taken out liquidity here. Two, we're bearish, and I'm expecting some kind of breakaway gap to be left behind. Three, internally, this is internal liquidity, so I'm expecting some kind of internal range buy side to be taken. This isn't external, this isn't internal. Well, it is internal, but it's not what I'm looking for. So when we drop down to the 4-hour, that's why, let me, 1 second, this is why I have marked out this block here. This is the last up candle before we moved lower and took out the sell side. So this is an order block, a bearish order block, and so I've highlighted it. And if we are to remain bearish, which I'm expecting, price should not trade above this. I'll explain that again. This is a bearish order block. If we are to remain bearish on a higher time frame, price shouldn't want to trade above this, especially not into these highs. So what I'm going to do is I'm going to drop down to a low time frame, and we can actually, well, first I'm going to mark out the 50% level. And then we can drop down to a low time frame. Right. And we're gonna make that red. There we go. So this is the highest I want to see price trade if we are to remain bearish. It shouldn't want to trade higher. I understand, again, I understand that there's buy side here and we have a break-in market structure here, but it seems to me like what they're going to do is, or what the machine's going to do is it's going to engineer its own liquidity, like create a swing here, maybe come down and use this as the buy side liquidity, and then trade into this and continue lower. So we'll drop down to the 1 hour and have a look. as you can see, we've aggressively traded higher, and we've literally touched that bearish daily order block and had a reaction straight away, like pretty much to the pip. Again, showing that there's resistance here and that price shouldn't want to trade through it. I'm going to mark out our new trading range now from the higher time frame, and we'll drop down to the 15-minute. So again, you can see the way that price treats these levels that we're trading in. We've traded aggressively back through that 25% level. I expect us to come back down, touch it before trading higher into this area and then getting rejected. I don't really want to see price come back up to the 50% level, although we have took out sell side now, and there may be reason to go up there because of that. Again, I don't think it should be disrespecting that daily. I don't think price should disrespect this, is what I'm saying. But we shall see. So I am going to leave this level here above this high, which is, I'll show you on the hourly. So this high here, I am going to leave in because it is still possible that price might want to tag it, and that would be a very high premium for price to sell from. However, like I said, I do think it's unlikely because, again, overall we're looking for sell side because we are bearish. So being in a sell program, price shouldn't need to or want to grab any more liquidity from here. So that's pretty much all I've got to say about GBP right now. You can see it's been quite a busy day. Again, a lot of back and forth movement, just like we had yesterday. This week hasn't been the best of conditions for trading, so I think it's safe we stay out or stay very careful. But I am going to take a look at DXY because yesterday we did a little bit of analysis on it. And of course what we said happened because that's just what we do on this channel. GBP baby. So I stated yesterday how I wanted price to what day are we on, Wednesday? Yeah, I stated I wanted to see this buy side get taken, this buy side get taken, and that there was a bearish order block here. We can see we actually traded through the bearish order block and actually took out the high completely, and then we got turned around. And it was nice to see that we found support on this level here. You can see our price traded back to this purple box I've got delineating a breaker, and then you can see our price found support within it and then used it to push higher, which is exactly what was expected. The reason this is a breaker, this is a classic ICT model. We got a swing high between two swing lows, swing low, swing low, swing high, swing low, swing low, swing high. Mark out the swing high, and you can see that price literally uses it as strong support for higher levels. But remember, in order for these to work, you have to understand the long-term bias and understanding that we are likely to be pushing into higher prices, and that's exactly what we saw. So yeah, although everything's going to plan and going as expected, trading is a whole nother story, because although I've managed to outline such specifics and such accuracy in terms of where I want to see price going and returning to, when it comes to actually trading it's different, because the confidence needed and trust within it is a whole nother level, which is why I've stayed out in the markets today, and I'll probably stay out tomorrow, especially after seeing back and forth action like this. So I guess we'll see. Like I said, I am convinced that this is the high of the week, but yeah, it's understanding that there's still liquidity down here to grab. Here, and we've only just taken out the first part of that, so I am expecting some kind of retracement, and it's already retraced to an optimal entry really for a sell, so we're back in. But if we look at our range between, how long have we been going? 9 minutes. Okay, if we look at our range between here and here, we can see that we're back in premium. So we got premium, discount, we traded to a discount, traded back into a premium. So anywhere around here we should be looking for sells, assuming we are bearish, which we are. So that's what's going through my mind right now. Let's say we start to trade aggressively through these levels and the price doesn't consolidate, my bias will change and I'd like to see this buy side get taken. But until that happens, I'm still bearish and I want to see us come up here and leave. So again, this is why this is another moment where you realize this is just algorithmic, because I've just given you an if and when situation. So like, if we trade above here, then I want buy side taken. If we stay below, then I want sell side get taken. Like, this is how the algorithm's thinking, and this is how I'm thinking, and that's how you guys need to think in order to be able to read and map the charts. What I am going to do is I am going to add on our daily dividers, and we're going to have a deeper look into how the 50% levels of each day has been treated, and we can start to frame potentially a trade for tomorrow around that. So I've marked out the 50% levels of Monday and Tuesday's trading. Let's have a look at this more clearly. So we can see this is the midpoint of Monday's trading. So from this high to this low, this is the midpoint, and you can see our price has treated this as a resistance and support level. Here we broke through it, traded higher, and then we trade below it, used it as resistance, and managed to trade down into this outside liquidity, which we had our eyes on. This is delineating the Sunday opening. Once we traded back above the Sunday opening, after trading below it, you can see our price kissed it goodnight, left it again, took out these highs, and now we're coming back to this 50% level again. And this marks out, this orange marks out a 50% level off Tuesday's trading, and you can see even volume has stayed below that. So I'm also going to mark out, obviously, that I'm going to assume this is the high for the day, considering it's 1 p.m. So I am going to mark out the 50% level of today, and then tomorrow's trading I'll be able to use that as an additional resource when looking at potential trades. Because I'm expecting low prices still, I'd like to be selling above this high. This is the kind of engineered liquidity I was talking about earlier. Like, I want to see this left here so that tomorrow we take it out and then use that as use that liquidity in order to drive price down back into the south side. We'll make it light blue. That's 50% level of today's range, assuming we don't go higher now. So yeah, it's just, again, I do suggest you guys check out 50% levels of each trading day, and you can see, like, again, the way that price acts around these levels, because it does refer to them. This red box was the 4-hour fair value gap, and you can see how price, again, this is at the 50% level of the previous day's trading. So all of these are just things that that can be used to find reason as to, to help understand your likelihood of understanding the draw on liquidity. That's the main thing when it comes to trading, I'd say, is understanding the draw on liquidity. But I don't want to keep you guys here too long. I want to say hello to all my new subscribers as well. And yeah, that's all from me for now. Don't forget to like, comment, and subscribe. This has been GBP, and I'll catch you in the next one. Peace.